Nvidia take over Apple. How crazy does that sound? The one last thing they need to do is right within their reach. But there might be something holding them back. Hint: it could be the US government. Here's the crazy part though. They could use this as a window to kick another tech giant off the tech sphere. And Nvidia holders might be looking at a huge payday. Insane things are happening today. So let's not waste our time and get right to it. Disclaimer: Nvidia is on the track to make history again. They are about to overtake the biggest company in the whole world. And what's crazy is that recently, Nvidia surpassed Microsoft again in market capitalization. Now, the gap between Nvidia and the top spot held by Apple is around $170 billion. With how big Nvidia is, this is just a small number. It's a striking moment in the tech world, and Nvidia's momentum is fueling speculation about whether it can push ahead of Apple. As of the end of Tuesday's session, Nvidia had a market cap of around $3.2 trillion, while Apple's stood at $3.4 trillion. Currently, Nvidia has around 25 billion outstanding shares on a diluted basis. These are all huge numbers, I know. But hear me out. Let's do the math. To catch up with Apple, all Nvidia would need to add just $6.8 to its share price. This may seem like a big jump, but it's not an impossible task. On Tuesday alone, Nvidia added a little over $5 per share. That shows just how quickly the stock can move in the right conditions. The real question now is whether Nvidia can make that leap past Apple. In pre-market trading recently, Nvidia was already up by about $1. At the same time, Apple was down. These movements, while small, could add to the growing pressure on Apple's lead, and Nvidia could soon overpower them. As Nvidia continues to rise and Apple's stock price shows signs of weakness, investors might start looking more closely at Nvidia as the better bet. If more people shift their money from Apple to Nvidia, it could have serious consequences for Apple in the long run. Lower investment in Apple could lead to reduced capitalization, which would affect its ability to fund new projects or expand its business. And this is just the tip of the iceberg. A falling stock price could also damage Apple's brand image. Apple has long been seen as the leader in innovation and design, but if its stock continues to slip, that reputation could be at risk. A weaker brand image might make customers reconsider their loyalty, especially in an era where competition is fierce and new technologies are evolving quickly. With Nvidia leading in AI and data centers, the tech-savvy crowd might start gravitating more toward what Nvidia has to offer. If Apple's stock continues to struggle, it could also start losing clients. Major businesses and industries rely on Apple's ecosystem, but as Nvidia's technologies become more critical to sectors like AI, cloud computing, and even gaming, companies might shift their focus to working with Nvidia instead. A drop in clientele would hurt Apple's bottom line even more, creating a vicious cycle of lower revenue and fewer opportunities for growth. In contrast, Nvidia's momentum keeps building. With Apple showing signs of slowing down, Nvidia could take advantage of the shift in investor sentiment. If Nvidia continues to outperform and Apple's struggles persist, Nvidia could eventually push Apple out of the way. What once seemed unthinkable, a world where Nvidia surpasses Apple, now looks like a real possibility. Investors and analysts alike are watching closely, as the balance of power in tech may soon change dramatically. One thing is clear: the competition for the title of the world's most valuable company is heating up. All eyes are on Nvidia to see if it can make history. But wait, there's still a potential problem that could pull Nvidia down. And we're not just talking about some minor issue here. They could be facing the US government. They're now hunting down a huge tech giant. And maybe Nvidia could be caught in the crossfire. So what exactly happened? The Department of Justice has announced it is considering the breakup of Google, following a recent ruling that found the company holds a monopoly in the search market. The US government accuses Google of causing pernicious harm to Americans by stifling competition. This basically means that they are dominating the market so much that it's no longer beneficial for the users. Google, controlling about 90% of online searches, has been criticized for using its products like Chrome and Android to funnel users to its search engine. The DOJ is weighing remedies to prevent this. Google, however, calls the proposals radical and warns they could harm consumers and businesses. Now, if the DOJ uses this strictness in clamping down companies that are dominant in their industry, then Nvidia could get in trouble. However, this situation could also pose a very unique opportunity for Nvidia. Hear me out. As Google faces mounting pressure from the Department of Justice, Nvidia could see a significant opportunity to expand its influence in the tech world. Basically, they could push Google out. With Google potentially being forced to break up parts of its business, the balance of power in the tech sphere could shift. Nvidia, already growing rapidly and is aiming for the top spot, might be well positioned to capitalize on this. If the DOJ's crackdown on Google leads to a breakup, parts of the search giant's business could be spun off or weakened. This could open the door for companies like Nvidia to step in and fill the gaps left by Google. For instance, Nvidia's expertise in artificial intelligence and machine learning could help it dominate markets where Google currently has a strong presence. With fewer barriers from a weakened Google, Nvidia could become the leader in areas like AI research, cloud services, and even the advertising technology that Google has long controlled. Moreover, Google's antitrust battle shows that the tech landscape is becoming more tightly regulated. Nvidia can use this to its advantage by positioning itself as a more adaptable and less controversial company. While Google struggles to deal with the DOJ, Nvidia can focus on innovation and growth, possibly taking over markets that Google dominated for years. In addition, any forced divestitures or weakening of Google's platform could reduce competition for Nvidia in key areas. Nvidia's advanced technologies, especially in AI and data processing, could become even more valuable in a post-Google-dominated world. As regulators crack down on monopolies, Nvidia's relatively diversified business might allow it to thrive where Google stumbles. The shakeup caused by Google's legal troubles might pave the way for Nvidia to take a more commanding role in the tech industry, reshaping the competitive landscape. And what's even more exciting is this. TSMC just reported a remarkable 39% year-over-year growth in Q3 revenue, driven largely by demand for AI technology. The company announced revenues of over $23 billion, surpassing expectations. This is significant news for Nvidia, as it highlights a booming market for graphics processing units, which are essential for AI applications. The strong demand for AI has a direct impact on Nvidia's business. As TSMC ramps up production to meet this demand, it indicates that companies are investing heavily in AI technologies. Nvidia, being a leader in GPU production, stands to benefit greatly from this trend. If the market for GPUs is growing, Nvidia can expect increased sales and revenue. This not only bolsters Nvidia's financial position, but also supports its goal of surpassing Apple as the most valuable company. As more businesses seek to implement AI solutions, Nvidia's products will be in high demand. This shift toward AI across various sectors can help Nvidia strengthen its market presence and push further into new territories. With companies relying more on Nvidia's advanced technology, the path to growth looks promising. In addition, analysts are taking notice of Nvidia's upward trajectory. This is such a crazy speculation, but try and hear this out. Cantor Fitzgerald recently reiterated its rating on Nvidia, maintaining a price target of $175 per share. This confidence from analysts suggests that Nvidia is well-positioned for future growth. As the demand for AI-related products continues to rise, achieving this price target could become a reality. If Nvidia successfully reaches this target, it will solidify its position at the top of the tech industry. Nvidia could leverage this momentum to outpace not only Apple but also Google. The combination of robust AI demand and analyst optimism sets the stage for Nvidia's success. With each passing quarter, Nvidia's chances of pushing Apple and Google further down the ladder seem increasingly feasible. The tech landscape is shifting, and Nvidia is poised to be at the forefront of this transformation. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video. And don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.